He is counselor to Treasury Secretary Scott Bessent, and he joins us now from the White House. Joe, the jobs numbers a little lower than the headline, but the attention is on the revisions. How do we explain those?
The revisions, Brian, have actually been quite consistent the last few years, where you've had this tendency of the numbers to change quite dramatically. That might reflect post-COVID response rates, which are a lot lower than where they were previously. The numbers certainly weren't what people wanted, but the good news in the report is the income proxy for where we are is still very solid. You're getting very solid income gains, upwards of 5% when we look at the index of aggregate weekly payrolls. So that's the positive. There's no recession risk. And with the one big beautiful bill having been completed, and with numerous bilateral trade deals with some of our key trading partners done, the outlook is very bright.
Let's talk about the revisions, though, again, because I need to understand what's going on, Joe. And this is not a blue or red, right or left, whatever thing, because as we tried to highlight just now, these revisions have been going on the last couple of years. We've seen numerous downward revisions over 75,000, numerous, by the way, both up and down over the last couple of years. So do we trust, you're a markets guy, do we trust the jobs number? It seems like something is broken here.
It does. And again, these responses are voluntary, and the numbers, the response rates have fallen. That's part of it. But what's really interesting, I don't have an answer for you, is that one of the revisions was substantial in state and local, and ostensibly you'd have a good response rate for the government. Arguably, that'd be one of your best places to have a strong response rate. So I don't know the answer to that. There are other data that does suggest that the labor market clearly is actually quite healthy. When you look at things like jobless claims, we've got a very low layoff or firing rate. But yes, your point is well taken, and that's something perhaps the BLS is looking into.
The naysayers out there, Joe, you know what they're going to look at May and June and say, well, what happened in April? That was the tariff announcement. Tariffs are the reason that we're losing jobs or numbers are being revised down. Is there dots to connect?
No, I don't think so, because, no, I'll tell you why. One, GDP rebounded quite sharply in the quarter, Brian, and the thing is the labor market does not respond that quickly, and we just see the size of the revisions alone tells you got to be very careful with the data. The good news, another good point I would make, is that financial markets are forward-looking. I understand why the equity market has pulled back today. We've had an historic recovery off of those April lows that happened intra-month. That pullback, which is relatively modest, although there was a historic recovery off of that drawdown, suggests that the second half and beyond looks good. But on the data integrity, this is one of these issues that market investors have grappled with for a long period of time. We look at things like the NFIB survey. There has been some improvement. There's increased expectation of increased hiring the next couple of months. So again, I think the slope definitely is pointing upward.
Let's talk about trade and tariffs. I know you're not the trade person, so to speak, Joe, but you certainly deal with the financial fallout from it. And here we had deals being made, optimism around China, all-time highs for the majority of the stock market. Then we get the announcement last night, and Dow futures fall 2%. I thought we were done with the trade talk.
Well, I think the market, the market has had such a great move higher that people were, I get a lot of street research, and I heard a lot of people telling me there was going to be a consolidation. The good news on the trade front is that we've made a lot of deals. Many people didn't think they would happen, that people were telling folks it would be much longer, yet a lot of these deals have come together, and it's happened, Brian, without any inflation. PPI, CPI import prices have shown very little, if any, inflation whatsoever, and we're collecting upwards of $300 billion in tariff revenue. So, the markets will move around. In general, they've been very euphoric, reflecting what they expect to see as a second-half economic boom.